Today on Resource Talks, Joe Mazumdar is going to be talking to me about gold, silver, platinum, copper, lithium, and hopefully a bunch of things in between, as well as what companies he's liking right now, and maybe what could go wrong for the overall well-performing commodity segment otherwise. Just briefly for people watching or listening, if you want a summary of this conversation and all the other interviews that we do on Resource Talks, go to resourcetalks.com. There's a free newsletter. It goes out once a week with a bullet point summary of all the conversations from the week before. And Joe, no pleasantries needed. Not really possible when talking to me anyways, but thank you for being here today.
Thanks for the invite, Antonio. I guess we talked so much last time that we just collectively have enough to do a long interview now.
Exactly. I think at one point we did like a 3-hour episode and we weren't even matching shirts that time. And now we're matching shirts. So
Yeah,
we should
I
probably be
heard.
stronger this time even.
No kidding, eh? Well, I mean, we don't want to, set the bar too high here.
And it's not pink, is it? Because I don't classify what I'm wearing as pink.
No, no, this is magenta, and any geologist worth his salt knows what magenta is. It's above red when you're doing a geochemical analysis, and the soil little square gives you magenta. That means that's good.
Well, that sounds a bit like a justification, but I'll leave it at that because I'm wearing a similar color right there. But
There you go.
no, I really am looking forward to having this conversation because you and I have been talking about gold for 3 or so years now, and you were directionally very correct on where what's going, and even just this year, it's up 35% year on
Yeah.
year, and so silver is up as well. I want to talk about that, but is it time for a breather on gold here, though? Do you think it's got some more room to run, or is this kind of the top?
Yeah, I mean, there's one thing about the gold price, the precious metals price, and then there's the equities. And so we're probably most concerned, because we deal mostly with the non-cash flowing
Mhm.
companies. We're concerned about the impact of the gold price on the equities that we buy shares in. Like I do own gold and stuff like that, but most of my exposure to that commodity would be in the derivative, which is the juniors and the impact on those. So I would say the gold price has done very well, and I was tracking it in terms of like to the end of 2024. So full year, the last 18 months, let's say 12 and 6, yeah, 18 months. And it's been up. The gold price in US dollars is up about 28%, 30% from that period. And I was thinking at that time because when I worked for Newmont, one thing like when Pierre Lassonde was there, he had always said like it's a bull market when the commodity is up in multiple currencies. That's definitely the case with gold. But I was expecting that the Australian dollar and the Canadian dollar might have been weaker, and that one might have been performed better. But it actually didn't. The US dollar one actually performed better as both the Canadian dollar and during that period, the Australian dollar actually strengthened,
Mhm.
which was unusual. So, in terms of gold, let's look at what's driving it is usually it's real interest rates. Which direction are you directionally where are you real rates going? And real rates weren't doing very much. Let's probably say in the latter part of last year, it had a bit of a pump and then it sort of was going flat. And then directionally, we had a change of government in the US. That created a lot of uncertainty in terms of tariffs, import export restrictions and stuff like that, drove a lot of Asian demand. So before it was central bank demand, which does not bleed into equities, it makes the price, I mean, the cash flow of producers better, but it doesn't really change the sentiment for a junior to go to the market and say, oh, I need money.
Mhm.
But then we had this, total, I don't want to say, uncertainty, let's just say. All that uncertainty instilled demand, Asian demand. And so you could see that when you look at the London AM and PM price, and the PM price is basically Asian demand, and that was trading at a premium to the AM price. That's telling you that there was a lot more Asian demand,
Mhm.
and the LME was getting tight. We had a little, what do you call it, an anomaly with that little paper that came out that maybe there would be a tariff on incoming gold bullion into the U.S., where the COMEX Premium went up to, I don't know, it was 25% of the price or something like that. Ridiculous. Like when I used to trade gold back in the 2000s, 6 cents or 6% was a big deal because the copper price was a buck then. But this is like it was like a blowout, like ridiculous, and it sort of changed trading patterns for a little while. That didn't that didn't resonate very long because the policy was changed or whatever implication was changed. The underlying demand, again, real rates, but then all the uncertainty driving physical demand. But if we're concerned about the equities, what really drives equities is mostly North American demand for gold ETFs.
Mhm.
That bleeds into gold equity ETFs, which bleeds into majors, which eventually bleeds downwards and trickles down into single asset producers, developers, the higher risk going down. And that changes the financing environment for juniors, which we've seen a lot of upsized financings, and not only in gold, in copper as well, and in other critical minerals or security minerals, as a lot of different sources of funding are coming now. We see more private equity. We see the royalties and streamers going crazy with respect to always hitting 52-week highs and record levels, and they're big and a lot of M&A. So of the 28 companies I'm looking at for the upcoming letter, Exploration Insights letter, is I would say about a quarter of them did M&A
Hmm.
this last 12 months. Some of that M&A, a lot of that M&A, I would say, would be for producing assets. Um, and now we're seeing some M&A for people with land, like Abra Silver with what was it? Torex. I think it was Agnes Gold with West Dome. So we may see more of people looking at non-cash flowing assets now, because the idea with buying producing assets, it's already permit, the tailings is done, the capital escalation risk is low, it's already in operation. And I'm willing to pay a premium on that. And most of the guys that bought have done well because the gold price has just gone up since they made that purchase. Now it's sort of like, do I take the risk and look at growth? Most of the cash flow that they've been making has now been expended predominantly on giving back to shareholders. And mostly the big companies' dividends, but a lot of people with these normal course issuer bids, which are the share buybacks. That's been a big deal. And so a lot of that cash is sort of saying, you know what, there's not a lot I can invest in, organically or inorganically that's better than investing in myself.
Hmm.
As opposed to investing in a new asset, build one, I just should buy my own shares.
Hmm.
As opposed to buying a company,
Yeah.
I should just buy my own shares, and that has been profitable for them. I don't know if that's going to keep going, because as we were talking off screen, that when I was looking at the financials, a lot of the thematic would be like flat to production going down the first half of this year versus the first half of last year. Uh, Costs going slightly up, but the gold price first half of last year to first half is up about 35 to 40%.
Hmm.
So it's all gold price. That's what drove, margins expanding, free cash flow generation. And then that free cash flow generation is going to all these other buybacks or dividends and some M&A. But most of the M&A, I would say, because their share price has done so well, has been all share transactions or a mix, because people are willing to take their paper.
Mhm. I've actually been wondering why that's not happening more, and it's good to see, some of the capital come back to shareholders here, at least with some of these companies. But the juniors, and I don't mean the GDXJ, I mean the three penny dreadfuls, the explorers and developers, if you will, that I like wasting money on. They're not moving up as a collective, right? I mean, a couple of
Yeah,
things are
you can't
moving
take
up
the
on.
index and say, hey, it's all, yeah, there's
Yeah.
not a good index for it, but you're right. It's not all boats are getting raised here.
Yeah. So what's it going to take for all boats to rise, essentially. Is that something we're really even ever going to see? That's something that I've been wondering about.
Well, I would say that we shouldn't see that. I don't want to see that.
Yeah.
Why I don't want to see that is then we're going to have a lot more misallocation of capital, because not everybody should get funded. There's got to be a gate for capital. This is a good project, this is a good management team, this is a good jurisdiction. Yes, you pass. You guys don't have any technical expertise. You've never worked in this jurisdiction. You don't have a lot of people with deep pockets that are behind you. Maybe you shouldn't get a pass. So I would like to see a little bit more, let's say, constraint that's going to the juniors, and that misallocation of capital will stop us from going through another cycle where people get burned and then have a reluctance to invest, next time. So what I would prefer to see is that the right people with the right projects in the right jurisdictions get money. And that's what I'm seeing. I'm seeing those people get oversubscribed.
Yeah.
I'm seeing those people have a lot of access to capital when they don't even need it. Again, it goes back to the old Pierre Lassonde saying, feed the ducks when they're quacking. Because, when you're playing the game of a non-cash flowing junior, you usually take the money when you can,
Hmm.
but you always want to raise it at a higher level. But I've still seen people and some companies in the portfolio raising money with, and it's a bit of advertising, I guess. You get the right people that will talk about your company, but you issue them warrants. It's all public. You're issuing them a 3-year warrant at a premium, but not a significant premium, to get the big names talking about your stock.
Yeah.
And I saw that with one company. I thought, wow, Jesus, this wasn't the greatest transaction, because the last time you did a strategic transaction at a premium with no warrants with a mid-tier producer. Now you're doing it with big name people, but you've issued them warrants at not a significant premium. The unit was at a discount, but at the end of the week they closed at a premium to what they issued those stocks at. So that's the kind of market we're dealing with. We're dealing with a lot of, like, look at Lundin Gold, single asset producer, high margin, but in Ecuador, right? And in terms of EV per ounce, it blows away the competition.
Yeah.
It just blows away the competition. But that's not, like, because of the jurisdictional risk, not one I would say would be the one everybody goes to, but it's funded, it's got the Lundins behind it. It's got the right people that own it, and
Hmm.
it does very well. But that wouldn't be the one I would pick. But now what we're seeing now is some marginal stuff that made negative free cash flow in the first half of last year, and they're making incrementally positive free cash flow. Those stocks have done obviously very well as well. But they're still some of those have still got big net debt burdens, that they haven't gone away because they're not making that much cash flow. They're just making on a percentage infinitely more than they did in the first half of last year.
Are you telling me I would make more money on worse companies because I can do that for sure. I can pick those.
Well, they have to be cash flowing. They have to have exposure to the precious metal. They can't be, don't do worse companies on the juniors because they'll never get funded.
That's right.
But back in the day, there was a company called Claude Resources that had an asset in Manitoba, and that wasn't their primary asset, but they got it. They started producing, but they had negative working capital. They had a big debt burden, so they were trading like flat. And then they started getting some decent intersections. They were starting to increase the throughput, and the stock went nuts. And part of that was because of their capital position before, and so they
Mhm.
went from very low numbers to very high, and on a percentage basis they did very well, and eventually got taken out by SSR Mining. So that can happen, but I wouldn't try to do that as a It's almost like doing an opposite. It's a call position, but it can be very risky because they need to make that free cash flow to put that debt aside and cover their interest burdens. So it is a risky game if you play it. When you can make 75% on the GDXJ, why play that game?
Hmm. Well, reverse psychology, that's a topic my wife knows a lot about. Maybe I should consult her when I'm picking these stocks. But how's your portfolio doing, by the way, this year? Do you like measure year to date numbers, or how do you are
Yeah,
you
no, we
outperforming that
measure.
GDXG?
Yeah, no, we measure over the long term, but also we measure short term, and then I show the subscribers every week how it's done. And a lot of what's done well for me has been grassroots exploration. A lot of it has been copper, some of it gold. One of my top picks in silver and gold, which is a developing play, which usually doesn't do great, has been one of the top performance and done well. Another one has been, in terms of cash flow, another royalty generator that's cash flowing has done exceptionally well. We had one taken out, which was good.
Hmm.
That was great because that position was like a 5-year position, and we made 8 times our money on that one. So yeah, it's a little bit like all the boats, going up. But I mean, some of these companies are not precious metals; they're copper, grassroots, and that's because of discovery and good drill results. Others are, rare earths. That market has changed. That's a lot more nuanced because you really need good technical people there. So it's not just, oh, I just put all my money on gold producers and just wrote it.
Hmm.
It's still a mixed portfolio that's still done well and beaten its benchmarks. But I would say that, that's because of the people that are running those companies, their access to capital, and technically they're very good.
Hmm.
Uh, and also that they've hit some really interesting results. Like I'm still adding companies, but the last company I added was a nickel company.
Hmm.
It wasn't gold. Uh, because of the valuation.
Yeah.
You look at it and you go, wow. And then you see what they're drilling and you go, wow, that's crazy. It's just but nobody's got their eye on that ball,
Hmm.
you know. So this is a good way of reallocating some wins into things that might be nascent and still growing.
That's a good point because I've been thinking about what to add myself. I actually don't really like bull markets. Uh, and I just talked to Neil Adshead about it. He doesn't like bull markets either, but for a different reason. For me, it's just because I'm a cheapskate and I just like cheap stuff and value, I suppose you could put it that way. Is there a specific subsection though of anything that you're paying attention to right now? Like, more explorers versus developers, and this is about going
Really?
forward because I understand what you
Yeah.
made money on, but like, or maybe I don't know, Finland because of growing attention, or epithermal systems because of some innovation or whatever, anything like that.
So, like we said, we've made some money, and the way to close out is something like I'll give you the name Origin Royalties. We closed that position. They spun out another company. We kept it, but the winnings from that reallocation into another precious metal play, which is exploration in southern Chile. And so that's gold and silver, and jurisdictionally, like I think Chile's on the upside. They're changing governments. It's going to be right. And the permitting is going to be easier there. And Chile's always been a good jurisdiction politically, but now it's going to be so much better because now the left-wing guy is gone, and mining is basically back on the radar for them. So I'm looking for more exposure to Chile. But I picked this one up because it was gold and silver, and it's ASX listed, so it might have been discounted. So that's the other thing is where it's listed. So copper and silver are underexposed in the ASX. And so some of those companies don't get the exposure because that's not when people are looking for silver, they usually don't look to the ASX. And so I picked that one up. I know eventually they'll probably list in the TSX as well. But before they hit that, I wanted to get in. I know the people, I know they have access to capital. So that was one I added. Another one I added was a nickel thing in Minnesota. And why? I think just like we were talking before about lithium, it's a nuanced market, but I think nickel has the opportunity to rebound. And Minnesota historically has not been a great place jurisdictionally. We've had Twin Metals and some other projects close to the Boundary Waters, which is the drainage into the Great Lakes that have been, stopped by the state, NGOs and stuff like that, very negative. And I'm not saying that under the current administration that any of those projects will get reestablished, but projects outside that drainage that have changed their mine plans to accommodate all the negativity or all the issues that people have brought them. In this kind of environment, you'll be harder pressed to, when somebody does all their work and checks all the boxes to still say no. And because now with the job situation and what's happening to stop a project that might add 250 to 500 direct and maybe more indirect jobs, it's hard for the governor of a state to say no. And especially when you've done all the machinations with respect to permitting, both federally and state. And every place is different. Some places the federal permitting exposure is higher, but in the current administration in the US, that's less of a risk. And if you're in a good state like Nevada, Arizona, which is very pro-mining, you're laughing. And hence, that issue that we were going to talk about, the resolution mining and Rio Tinto and BHP meeting with the U.S. administration this week, which is a big deal because that project has been there for decades, and it's more important now, obviously, with the copper.
Yeah. Who do you think though? And I do want to get to that. I'm not going to ignore that part about Trump and the copper situation with resolution. But who do you think is next on the M&A front here? M&A also seems to have sped up a bit, as you mentioned. Do you think we're going to see more M&A in the US because of that? Where do you see the next leg of M&A?
Well, I mean, I think what I'm hoping is we'll see more development assets come, and that's really where we're looking for, is those non-cash flowing assets that might still have issues raising enough debt because there's not enough people that want to, give these companies debt. And so where are they going to get it from without having to do, let's say, a crippling stream on their main product, which I'm not in favor of. So that's what I want to see. I want to see more of that kind of M&A and not just strategic placements, but an absolute, okay, we're going to build this project. This one looks good. We're willing to take that risk on capital, on permitting, if it's not permitted, blah, blah, blah. What I'm finding now is that it's best to put your money in companies that actually have the management team to build a project, not a fake one, not a guy that's just done technical reports and stuff like that, but has never built a project in their lives. You want people that have that mentality. And I would say there's more of those kind of people with ASX listed companies than there are TSX listed companies. More TSX listed companies are more into the transition. Okay, then we'll bring in a company and then this is where we'll get taken out, blah, 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 blah. They'll never build it. Whereas ASX companies tend to pick assets that they think that they can build themselves, that don't need $5 to $7 billion to build, that they can manage themselves. And so when you have that, that idea that you're running, let's say, to the end zone in terms of American football analogy, it's hard to get tackled. Sometimes, if you're standing still, if you really want value appreciation, let's say more yardage, you got to be running to the end zone. And you have to have that kind of commitment that, well, if I don't get the best deal on the M&A, I'll just build it myself because I can get a bigger premium once I'm in production. I have a permit, I've built the project, blah, 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 and I don't mind doing that. But a lot of people won't give. I mean, that impression is fake, and it's probably reflected in their share price. That it's always going to be a takeout. They'll never build it. And so, there is a bit of a nuance between ASX and TSX management teams with respect to that.
Totally. I did a whole episode on this not too long ago with Mark Bennett of now S2 Resources, but before that, he's done some other stuff in the meantime. And there definitely is a big difference there. Also culturally, again, something that I discussed with Neil Adshead recently as well. But you're right. To your point, though, of those development assets, again, going back to what you said about the Trump stuff and resolution, essentially, but it's BHP and Rio Tinto have spoken to Donald Trump in the White House. It's just now happened, right? It's talking about resolutions. It's a copper project in Arizona, and just a couple of days after the U.S. The U.S. court blocked the transfer of Oak Flat, right?
Yeah.
And a couple of things are going on there. I don't really know what's going on there, but it does look interesting. And so what that's making me think is this a actual pivot? Like, is this signal or is it more noise? Is it a pivot to US political support for large resource projects, or is it just noise and just another piece of news?
Well, so under the Biden administration, that original land swap was approved, or it might have been under Obama. I can't remember, but then the NGOs came in and they took it to court, and then they got the land swap like revoked. And so it went backwards a step. And so they've been going backwards and forwards. But this current administration, that sort of risk, I don't think exists. Where just like with Trilogy, the ADA, the Alaska Development Agency or whatever, they got the road approved, the 311-mile road, which was very good for Trilogy and South 32 that want to build the Arctic VMS copper project in Western Alaska. Then the NGOs came in and said, "Oh, you didn't talk to these three villages, that have 50 people in them." And they went through a 5-year permitting, you know, uh, thousands of pages of documentation. And so then these people said, "Oh yeah, well, you didn't do this." And so that risk of going back to the courts and then the Bureau of Land Management, sort of saying, "Oh yeah, no, okay, we're not going to touch this. We're going to suspend your permit." That is not going to happen under the current administration. Once you get it, you're done. And I think that's much more force in that than there was under the previous administrations. So
So
I
like
think that is the flip.
tribal and First Nation challenges, essentially.
Yeah, those challenges, once everyone's gone through their permitting and checked all the boxes, somebody coming in at the midnight hour and saying, "Oh, hey, you didn't talk to this guy," or, "Oh, we don't like this." I don't see the BLM or the U.S. Forestry Service now
Hmm.
bending backwards and saying, "Okay, we're scared of getting sued." I don't think that's going to happen. But I'm not saying that the federal government can permit a project that the state doesn't want. If the local municipality and the people there don't want it, the federal government can't make it happen. Like Pebble, I think is still a high risk project, but South 32, Trilogy, and Arctic has become a less risky project. It's still going to take a long time to build. The road will take a long time. All that'll still take time, but uh, the current administration, I don't think they're going to go back on the road, obviously, like they last time. I think that projects in Arizona that have any federal issues, some of them may, they won't be issues anymore, like resolution. So I see the federal issue, like the permitting for Perpetua's Stibnite project.
Yeah.
That took a long time, a lot of feasibility studies, a lot of drawn out permitting. The state wanted it, very pro, but the federal government, you have to deal with the Forestry Service and the BLM, a joint process, all the other rigmarole. Um, and that got permitted, and then that it's got a letter of intent with the Export Import Bank to give them a significant wad of capital at a low cost for basically, for the antimony, which is probably only 10% of the revenue
Hmm.
because it's a gold project. So this, I think, is a positive for the U.S. But state by state, you still got to look at where you are. It's very similar to Argentina in that Argentina now the federal government is very pro-development. They've developed a scheme where any investment over 200 million, you get special tax breaks, duty breaks, all this other stuff. If you spend, 70% of that money within a certain period of time and blah, blah, blah. But it's very pro-federal. But that pro-federal regime, tax structure and that won't save you in a bad province. Like if
Hmm.
you're in Chubut and Pan American wants to build Navidad, if the locals still don't want the project, it doesn't matter what the federal government says because it's still a provincial thing with respect to development.
Yeah.
But if you're in the best state in the States, it's a lot easier. If you're in the best province in Argentina, the federal government makes it easier.
Well, supposedly fortune favors the brave. So if someone is brave, what do they do here? Is it like you're saying, no, it's not Northern Dynasty because Pebble's still challenged from the locals' perspective. What is it that you do? Like, is it what's undervalued right now, but has that potential upside again with risk?
Yeah, I would say like if you're into development and let's say you're in Arizona, the US wants copper, and people got to understand the difference between cathode and concentrate. So Resolution will not right now produce cathode. Right now, their idea would be to produce a concentrate. That concentrate has to be smelted. Right now, we don't have the smelting capacity in the US for that project. So somebody would either have to permit a new smelter or we introduce another way of producing cathode from that concentrate, which you can do at lower recoveries, or you send it overseas to be smelted. So that's one project. Copper World, Mitsubishi has come in and are now helping them fund that project by taking, I believe, a chunk out of it. And they would produce concentrates as well. Mitsubishi's interest would be in the offtake to take that concentrate to Japan.
Hmm.
Ivanhoe Electric, they put out, I believe, a PFS on their project, which they are looking to produce cathode on. And that's just south of the project called Cactus Park Salyer, that's owned by Arizona Sonora. I think that's still probably undervalued with respect to what else is happening in Arizona. So that's how I play that.
Hmm.
Uh, but interestingly, is they don't need much federal government help because they've been over the last several years going out of their way to buy private property. So it was only state. And they've never had what they call the waters of the United States, WOTUS. So they never need a 404 permit from the U.S. Corps of Engineers. So they've already mitigated most of that risk. And so a lot of companies may be looking for help for the federal government in that, and they will be producing cathodes. They don't really need it because their project doesn't require much, if any, federal permitting. It's all state. And so they probably have one of the lower risk permitting paths for what they're trying to do there.
Do you think this could lower the interest in other copper jurisdictions, though? Because, like, if the U.S. opens the door massively, does that make jurisdictions where political risk was, for example, higher, does that make them less interesting because now you can do it domestically?
Um, Yeah, I mean, the thing is about copper with the US, usually, I mean, because they haven't been a big manufacturing place for probably since I used to live there in the 2000s. It started going away in the 2000 when China, the super cycle and all that, ship all the manufacturing and all those jobs away, which they're trying to retrieve now. It's a different dynamic. Whether they'll ever replace the manufacturing capacity that existed 25 years ago, I have my doubts because it still needs that kind of skill set, which they don't have.
Mhm.
So it will have an incremental impact, no doubt, but it can't replace the amount of copper that goes into washing machines, cars, whatever, that they actually need. But it will be, it'll be some because the U.S. in terms of endowment of minerals is not starved. It's not China. They have endowment. Their
Yeah.
problem is permitting that endowment, on public lands mostly. That's always been an issue. But now there's more of an impetus. If you want this, it does exist in your country. You just have to develop it. And if you develop it, now you have to refine it. And all those downstream processings are getting highlighted. There's no point in us making an intermediate product that we have to send to China.
Mm.
We have to make the ultimate product that the car companies want or, whoever wants. We have to make that product, but that involves a more vertically integrated strategy that didn't always exist.
I've actually always been thinking about, nah, that's not true. Not always, but I have been thinking about it. Why do majors not spend more money on political lobbying in the US and, pick up projects that might have been challenging from the permitting perspective before that from companies that don't have the deep pockets to do that lobbying
Yeah.
and then spend money on that lobbying for those projects. And it seems like it's kicking off right now. Do you think we're going to see more of that?
I would say the lobbying issue, especially
Yeah.
with projects like Resolution, has always been there. They do a lot of lobbying. But the problem is that they have to deal with somebody that, no matter how much money you spend, that First Nations group doesn't want the project. You'll hit a wall. So that doesn't impact the obstruction. Now it's the federal government that's just sort of going over that wall for you. And so all that cumulative lobbying you've done is now reaping its benefits, probably. I mean, at Newmont, we used to lobby to lift a cyanide ban in, I believe, Montana at one point. Uh, you know, um, so there's always lobbying there. It's a well-known sort of exercise that people do, especially in states that mining is big deal. It doesn't matter if you're Democrat or Republican. If mining's a big deal in your state, you'll promote mining.
Hmm. What else do you have in terms of those projects? Like you mentioned, Trilogy Perpetual with their Stibnite Gold project. What is their Rhyolite? Uh,
Rhyolite Ridge, the one in Lithium in Nevada.
Nevada, yeah.
Yeah.
KSM,
KSM's in British Columbia, though.
yeah, yeah. But at the same time, I'm just thinking from the perspective of lobbying. Like, are
Yeah, like
companies
I
going to
would
do more
say that
lobbying
thing
or
that I
role model?
mentioned in Minnesota, Talon Metals.
Hmm.
That one was permitting was always an issue because of all the projects in Minnesota that weren't getting permitted that hit a wall. They're not in that drainage basin that goes to the Great Lakes. They'll go all underground, and they have basically decided to put their plant, which they've got a letter of intent with one of the federal government agencies to build in North Dakota and not in Minnesota, so they won't have a tailings facility. Uh, so they've gone around all the issues that people have had. They basically tried to eliminate them, and they've
Yeah,
eliminated them. So now the state government that was piling on the negativity because they thought nobody wanted the project, but now they see the job potential and they see that they've gone out of their way to have a permittable project, have now invited them to the Minnesota State Fair to sort of say, hey, show us your wares here at the Department of Natural Resources, part of the Minnesota State Fair. And also, there's a little bit of a nuance saying, hey, why are some of these jobs going to North Dakota? Well, because you wanted us to build the facility, the processing facility there. So could that change? I don't know. But, so a lot of that nuance is changing because of the tariffs, because of higher paying jobs that are related to mining, which is considered manufacturing,
yeah,
and people trying to add them. I know, Minnesota is a Democratic state. Like Michigan, it's much easier than Minnesota to permit things. But again, it's hard now in any state when you've got a company that's gone through all of the steps that are required and to not let them permit it. when you've done the local First Nations, when you've done the social license to operate, and then say, no, we don't want the project. That's harder to do in this current environment.
Yeah. Well, but and so to that point as well, it's like what I said with KSM, and that's not the only project up in Canada where you might have provincial, but not federal approval. So my point was more like, are we going to see more lobbying from the larger companies that do have deep pockets in different jurisdictions because it's happening in the U.S. and because the U.S. is giving in and kind of opening the door to that idea as a whole? Are we going to see it in other jurisdictions where maybe they're not, topic du jour and people are not thinking about them right now, but they could be those undervalued opportunities?
Yeah, I would say Canada is a bit different than the States in terms of permitting. So there's projects, that you might be concerned about permitting that are probably not permitting issues and more capital issues because they lack infrastructure. And who's going to build that power line or who's going to build that tunnel, under a mountain to get your ore out? Those are more of the issues I see in places like British Columbia or the Yukon,
Yeah,
and Northern Ontario and some places like the Ring of Fire. Quebec has more infrastructure, roads, power, but still, some of those projects are rather remote. But infrastructurally, because they have done a lot of forestry, the access is a lot better. I mean, granted, a lot of the money has come from Alberta with funding the transfer payments, but they've built their province out infrastructurally. That's not the case, obviously, in the Yukon, where they've only got 40,000 people and they don't have the tax base. Need federal government help to build a road. Do we ever extend the power line from British Columbia into the Yukon? That'll cost you at least $2 billion and take about 5 years, maybe 5 years just to permit. So are we going to do those big things? Like Canada is not the US. We don't have a US Department of Defense that has all this money that we could just reallocate. We don't have a Department of Energy which has a big budget that we can reallocate. We don't have that kind of money. And
that's true.
since we're not interested in China coming in and building it for us, and now the US is more into building their own infrastructure and not building infrastructure for other people. And now we have that, 51st state talk and the tariffs and all that. There's less of a relationship with the US and Canada in terms of building up assets or resources or nearshoring here.
Is that only copper though? Because I mean, the focus or where we kicked off this conversation about this specific topic was copper resolution, right? Is it only copper? Are we going to see it? Are we going to see more support overall for other metals as well? I mean, you was talking about gold being a critical metal now as well. So
In terms of the states, in terms of
yeah,
helping to permit, yeah,
yeah,
no, like talent is nickel and copper and PGs potentially. I would say yes, absolutely copper, but I mean, like I said, Perpetua is gold and antimony. What you will see is also rare earth, but mostly on processing. They'll make that much easier to do,
mhm.
and you'll have people wanting to attract these people. But the problem in the processing part, the mining part's easy, especially for critical minerals. The part that's hard is processing, because over the last 2+ decades, China has built up all the technical capacity and intellectual property in processing. And processing for critical minerals is much more important than mining it. And so if you invest in these kind of companies, you got to understand that they understand what they're doing with respect to getting that product that's saleable. We've had those issues in lithium where somebody produces a technical lithium product which can't be sold and sells at the market for 50% of the lithium carbonate equivalent price. So in rare earths, it's even more of a problem. If you make a product that you can't make into a metal alloy, nobody wants it. It's the demand for that is just doesn't exist. So technically, you have to make sure those people that are doing it have that downstream ability more so than the mining ability, because the mining ability is not the risk.
Yeah. And is that only true for the States again, I'm thinking, or is it something that we see and we haven't even talked about Europe, like we touched upon
Yeah,
Canada as well, but
it's
there's
global. That's a global thing because if you look at the, the mining part of it, I mean, it's not so much China that dominates the mining supply. What they dominate is in the processing of
Mhm.
many critical minerals. Like even gold. China is a big producer in gold, but I'm hard pressed to name a mine that produces gold in China because it's a lot of little things that they just say they'll it's uneconomic, but what's cheaper, making it there or buying it from overseas that we might get a tariff on or something like that, or just making it at home. So they get the most use out of their land, but it's not none of their land is arable in terms of agriculture, but a lot of they don't have the mineral endowment in all the minerals that they need, just like Japan. So they build up processing capacity.
Yeah, I always like these news articles where it's like China found a $7 trillion gold deposit, and they drilled a
Oh,
hole here, and then they drilled another hole 2 kilometers away,
two
and they're like,
kilometers away, and
yeah,
it's a resource. Yeah, yeah. And that's probably like a nuance to say, okay, this might make the gold price cheaper that day, and we're just going to buy some gold. But I mean, if you look at infrastructurally, what they're doing in Brazil, like with all the tariffs and people sort of siding with one or siding with the other, whether it's the West or China, or let's break up the West, whether it's Europe, the US, or China. China's building or renovating port facilities in Brazil and also in Peru to get around going through the Panama Canal. And so they're building out all that infrastructure, not only for agriculture, but also for minerals, any kind of resource,
mm,
to make it easier for themselves. Um, because now they're not getting, let's say, canola or soy or whatever from the normal sources that they would get it from the US.
yeah, yeah. Well, we haven't really talked much about silver, but I see silver being mentioned as one of those critical minerals a lot, and I'm kind of split on silver. I'm sure that's going to get me a bunch of love online saying it, but yeah, what's going on there? I mean, year to date, it's actually outperforming gold. It's almost $40 now an ounce. Is it time for a breather there? Is it a completely different story related to what we're talking about here? Where do you see that fitting?
Well, silver for me is more of an equity thing on the actual producing side and exploration development because of the geopolitical risk of operating in Mexico and the time frames to permit develop in Peru, which are two big producers of silver. If you're looking for silver dominant plays outside of those jurisdictions that have at least 40% of in situ value in silver, it's hard. It's very hard. And so those ones tend to get now looked at. And so when I talk about silver exposure, I'm not talking about Peru. I'm not talking about Mexico. I'm talking about Argentina and I'm talking about southern Chile. But those are hard to find. It's hard to find those kind of silver plays outside of these jurisdictions. And so that's the nuance for me. So my thing is like, yeah, silver exposure is good. Yeah, silver price is good. It's going up. But I'm less about the silver price than the supply of silver
Hmm.
and looking at the constraints of that. That's not a problem in gold. It is a problem in silver, I think because all the exploration that's not happening in Mexico will have an impact on silver going forward.
At the same time, though, I think about geologically as well, because you're mentioning the equities here. And so, is it really responsible to bet on silver alone and look for pure play silver names, of which, again, there are very few out there? So,
Yeah.
how do you even get
Especially
exposure?
outside of Peru and outside of Mexico.
Yeah.
You know, most of the silver M&A that we've seen have been companies that already operate in Mexico and are willing to increase their exposure to Mexico, and they're mostly underground. We've seen a lot of that kind of M&A, but we haven't seen people from outside coming in to say, "Hey, I want to gain Mexican silver exposure." We don't see that.
Yeah. Not a lot of companies wanting to gain Mexican exposure as a whole, not only silver, I think. what do you make of that situation there? And there was just recently a deal related to it. I suppose to the conversation here, but Minera Alamos. What do you make of
Going
that move?
outside and buying stuff in Nevada.
Yeah.
But look at Discovery Silver, big low grade open pit deposit in Mexico that they just basically said to themselves, this will never happen. So they went out and bought an asset from the asset sale Newmont was doing. Management have much more intellectual property and proprietary knowledge of that part of the world because Tony McCooch, lives in Timmins and that. And so they bought a project there. And Discovery Silver just completely changed, pivoted, 180 from silver open pit, low grade Mexico to, you know, moderate grade, let's say over a gram open pit in Ontario. And those deposits have been doing well, in terms of generating cash flow for your Agnicos and people like that. So that's been good. And so their share price and their valuation has done very well, not because of Mexico, because they pivoted. And that's probably a little bit of what Minera Alamos is thinking. I mean, Torex is sort of maybe a bit handcuffed in Guerrero, but their idea of probably diversifying is staying in Mexico, but going out of the state of Guerrero, which is problematic in itself,
Mhm.
even in Mexico. That's even worse. I mean, just security wise, because not only in Mexico do we have to deal with, the left wing government, which is Morena, which has 70% of popularity in the country. So they're not going anywhere. They're changing the judges as well, and that's a big deal. Their exploration is not possible there. But what Torex has done is they, bought a company like Prime, was it Prime Mining or something like that? But that's an open pit heap leach project. So I don't know when that will get permitted under this current administration. But in terms of getting land, it's hard to get new ground. And so they picked up Reyna Silver for not too much money to get a bigger land package.
Mm.
We've seen that same thing, like I said, with Westdome and Angus Gold or something, that they picked up that property just for land,
Yeah.
to get more exposure to land because everything's tightening as well with respect to people wanting ground in that part of Ontario.
But so not yet time to get contrarian on Mexico. You think it's too early?
I'm not doing that. Yeah, other people might. I'm not there yet. I mean, but no, the nuance here is that probably underground development in good states in Mexico could still happen with the government, the local government supporting you. Um, but open pits, even though there is not an official ban on it, yeah, I wouldn't do it. And also exploration is a nightmare there.
And then that's
Into
across
acquiring new
states, or
ground.
because I do know that it is also state dependent. And again, there's cartel stuff that you have to pay
Well,
attention
that's the other part of it is that extra cost of dealing with the cartels. Whether it's a truck or whether it's paying them off, or the risk of your concentrate not making it to the plant.
to. Yeah.
That's another thing that still happens there, and so that risk exists as well.
Hmm.
So for me personally, I'm not into that.
Yeah. What do you, anything else in South America though that you're paying attention to? There's a private company actually that crossed my desk recently in Uruguay, of all places.
Yeah.
First time I'm really looking into it from the perspective of mineral exploration. Anything interesting like that that's crossing your desk?
Yeah, I'm not too keen on going out of jurisdictions that I like. Just because I mean that's usually what happens in a bull market is the money starts going to riskier place.
Mhm.
Uh, you know, but the problem is when the money comes back, those are the first things to get cut again.
Yeah.
So if your cycle in terms of discovery and that overlaps, there'll be a point where that thing won't get funded anymore
Right.
unless there's deep pockets or it's an exceptional asset. Uh, our management team has their fingers in a lot of people's capital pockets, let's just say, that could work.
Mhm.
But jurisdictionally, Africa, still in this environment, West Africa is not easy, but there's companies like Montage Gold developing there that have done well. But definitely others have not done as well as others have done in terms of development assets. I think Namibia as a jurisdiction looks very good, but then I just saw a recent article that the government wanted to take a bigger chunk out of the assets, which, that's the problem with this kind of environment. When everyone sees the commodity prices going up, they want a bigger take. The problem is when they want that, then the exploration acts that it acts quickest. So that money just doesn't get allocated to your place a lot quicker than any other capital.
Mhm.
So that can become a risk as people look. Oh, hey, look at the gold price going up. Look at the copper price going up. Maybe we should try to get a bigger piece of this pie. Um, so that can be a problem, especially with jurisdictions that are not as well developed, that are looking as that asset as a cash cow, like Panama was with Cobre Panama, and then locally they didn't want the project. It was too big of a proportion of the GDP. You know, uh,
Their problem was calling it Cobre Panama. They should have called it Cobre Peru, and it would have been all safe, I think.
or they could have called it just Panama, uh, and
It's
not
that's
have the
what it
Cobre
ended up
part.
being. So
Yeah,
in the end, but
yeah, yeah.
so I'm writing down no Cuba exploration for Joe yet.
Well, I've always had a problem with the Caribbean. I mean, not to go on vacation, but just in terms of developing projects there or Central America, burned in Guatemala, and water's an issue in a lot of these islands. And so to build a big copper plant and then have, the water being, diverted to the plant versus use, that could be an issue. Not too keen, not too keen on that part of the world.
Vacation though, you're still okay with that. I'm gonna write
Yeah,
that down
vacation
too.
fine.
Okay.
Vacation fine. There's plenty of water for a couple of weeks. You know.
Well, talking about overperformance, platinum has actually beaten gold and silver on both year to date and year on year. Do you have a take on that? Is that something you would typically follow, or do you mostly stay away?
No, I've got some PG exposure in Brazil, but more on palladium over platinum over nickel. Uh, so yeah, no, and those are options where you just hold because you don't know which one's going to go up. And because it's multiple commodities, but jurisdictionally it's a good spot in Brazil. Infrastructurally, they've got power and water and blah blah blah. So I can hold it for that. Good people, access to capital, and so the platinum price has gone up. They've done well on that, but they're more palladium. And so what we have to understand with platinum is cumulative deficits, and people are, realizing the cumulative deficits, and so the price has gone up because of those deficits. But there's a substitution issue with platinum and palladium, and platinum got higher demand because the palladium price had run up several years ago, but now the palladium price has come back, such that I believe that palladium project that a South African company had in in Northern Ontario got shut down, I believe, or it was going to go on care and maintenance. I don't know if that happened, but that's where palladium prices had got down to. So some of the more marginal projects were getting pulled back, just like nickel was happening. But there could be some substitution there, and so that could bring palladium back as well. And these markets can be, shifted pretty easily on scrap supply, or the lack of. But I'm sure the cumulative deficits in platinum have been underpinning why platinum's done well. And PGs as a whole, it very highly linked to vehicle sales, and not vehicle sales of EVs, but more vehicle sales of just internal combustion engines and hybrids.
I really don't have much to ask about that there, specifically that dynamic platinum and palladium, because it's also so hard to play it though, right? I mean, it's just so
Yeah,
concentrated. I don't
you
even know
palladium, you go Russia, or
yeah.
platinum, you go South Africa, and that never works. And we've had that argument about, hey, find something outside of these jurisdictions, and you'll mint money. Um, it's never happened. But potentially under the current supply chain risk issues, tariffs, and that, it might be more of a concern.
Yeah. I just mostly, yeah, mostly have ignored it over the last like couple of years, 2, 3 years, something like that, maybe two, because again, yeah, finding no decent risk reward exposure for myself there. I forgot to ask something about silver, but Abra Silver. I remember when it used to be called Abra Plata. So I know
Yeah,
you like it since then, essentially. Do you
yeah, no,
still
it
like it?
was we've had it for a while, and it's done very well. It continues to be a top pick, and this is a development play. They put out a new resource, but they would fall into that RIGI plan in Argentina in terms of an investment of I think about 500 million. Because of all the lithium projects there in that part of Argentina and Salta on the Altiplano there, there's more infrastructure. And the road that I used to drive to get there back in the 90s used to take about 12 hours. Now it takes about six. And there's a lot more power possibilities for them because of all the infrastructure built out with lithium over the last couple of decades. And so that place looks a lot more doable than it ever has. And when Barrick used to have it, it was metallurgically, I had it in my head, it was a metallurgically problematic deposit because they were trying to heap leach it because gold price was $250 an ounce and that kind of grade didn't make sense then. But now, where silver and gold is now, milling it, getting better recoveries makes sense. And so metallurgy isn't the issue. Their bigger constraint on the 9,000 ton per day plant is water, but they continually looking for new water. So there's an opportunity there to increase capacity as well if they can get the water going.
Mm. How much more upside do you think there is in Abra Silver here? I mean, is it $1 billion market cap company right now?
Yeah, well, I mean, the thing is that you could say that about Agnico. That's a big project, a big company, and that's the one that keeps going up because people see something like silver and they go, I don't want Mexico maybe, and I don't want Peru because it takes forever. I want someplace in a good jurisdiction. How many choices do I have? And I want to take out in a place that can get permitted, blah, blah, blah. How many choices do I have?
Mm.
And, that project, won't have a problem getting permitted. That project will probably not have a problem getting funded now because now with the RIGI, they can repatriate money now. Whereas before they couldn't. And because you couldn't repatriate money, you couldn't get normal debt funding for that kind of a project
Hmm.
in Argentina. Now you can. But I'm thinking it's going to be more of a takeout target, but they've built up the team to build it themselves. It's not an overly complicated project. It's mostly open pit, stripping and, just milling,
Who do you
recovery,
think
everything.
takes it out? Who do you see this asset fitting with, though?
It could be anybody. I mean, anybody that's got too much exposure to countries they don't want to be in. Uh, because I mean, like you said, it's not a small market cap. So, recently we saw Pan American by MAG. So how long does that take them to absorb that project? And a lot of silver companies like Coeur, they also bought, I believe, into Mexico. We have First Majestic doubling down on Mexico as well with Gatos. And so it might be a company that's looking at this like another silver play that wants to be bigger. It might be like a combination where somebody's already producing and they want a development growth project and you take shares and now they have cash flow so their cost of capital is cheaper, easier to build the project. And so it might be something like that.
Hmm.
There's more of those companies out there.
Yeah. There's a couple of smaller companies in Argentina too. Is that something you feel comfortable talking about as well, like Aldebaran, for example, a company I've
Well,
had on the list
smaller,
before?
but I mean, it's a big project,
Yeah.
and it's good people that have worked in Argentina for a while or that part of the world. I've known John Black for almost 25, 30 years, and Kevin Heather. So technically, you got some of the best people out there. Um, Altar has been around since I've been in Argentina in the 90s. It's an open pit, so that's the proposal. It doesn't need a tunnel or anything like that. It's yeah, it won't be a small capital project, so they're not going to build it. I will know more about that because I'm doing a trip down to Chile and Argentina in October for this conference called Latin Rocks, which is a technical conference. I'll go see an operating mine called Caserones, which Lundin Mining is operating in
Yep.
northern Chile. I'll see ATEX in Chile with their Valeriano project, and then I'll see Aldebaran as well. So I'll have a better idea what's happening with these copper plays down there right now.
Yeah. What about some of the really small names in Argentina? I mean, what used to be called Pampa Metals, it's Andina right now. They,
Yeah, now they got a project in Peru as well. Oh, no, in Colombia. In
yeah.
Colombia. Yeah. Yeah, I mean, I think Argentina is a great place to be if you're in the right provinces, and they are in San Juan. Uh, Colombia can be problematic, but the gold guys seem to be doing well in Colombia. Um, and I know of a private company there that I might visit in November that's doing very well and staying private because that usually works for these kind of jurisdictions to just stay private. But yeah, Colombia might be turning because I think B2 Gold is looking with a harder lens at developing Gramalote, which has been on the shelf for a long time. Yeah, let's see what happens in Colombia.
Hmm. Yeah, Colombia is geologically interesting. I think politically, and also from the perspective of organized crime, not as easy, but also not impossible either. Again, if you're in the right
Yeah, I
spot
mean,
and
but
know how
that
to work it.
issue of crime is now all the way from Peru, Ecuador, and Colombia,
Hmm.
and we're talking about what they call artisanal miners, which are not artisanal miners, they're more like criminal gangs, and they just go and mine with no permitting, no nothing. They've just made an agreement with the locals. They're paying them to mine there, and sometimes they don't pay, and then the locals get all mad. And you have incidents in Colombia like what happened in Buritica. Before when Continental Gold existed, they had those geologists that were killed, murdered basically at the Berlin project there. So yeah, security risk as well as jurisdictional risk with respect to permitting and NGOs there in some of these jurisdictions.
Yeah. Well, while on the topic of South America, we might do a bit of a soft pivot here, if you will, and talk about lithium, because a lot of it comes from South America.
Yeah,
Lithium is up almost, what, 50% in like 2 months or something like that.
yeah.
What's your take? Is this a sustainable bull market now, or is it a speculation based? Are the guys down in South America going to, turn on production a bit more and then crash the price? Where do you see it going?
Well, you have, the issue with probably a lot of development not happening, especially in Western Australia. So you're not getting a lot of that spodumene concentrate going to China anymore. Not a lot of new development projects in spodumene. And spodumene on the cost curve is probably on the higher end because of all the infrastructure required, because you're taking a rock that's, let's say, got 1 to 1.5% lithium oxide, and you want to concentrate it as 5.5%. So in terms of concentration, it's not much concentration. It's not like a copper project where you're taking less than 1% and making it into 25%,
Mm-hmm.
so tonnage wise and what you're shipping is a lot less. Not the case in lithium. So you need that infrastructure. And then where does that infrastructure go to? Do you build a processing plant there? And what are you shipping? So are you shipping all of that lithium concentrate at 5.5% all the way to China, which might cost you a bit? There's less interest in lithium just right now with respect to car companies, especially. So there was a lot of talk about Ford, helping out with this plant in Canada and then building up. But the U.S. companies, the U.S. car companies especially, they don't see much growth in EV demand in the States, and so they're not putting a lot of money into that. The money is really coming from China and maybe Europe,
Mm-hmm.
but it's not the U.S. So yes, on the lower end of the cost curve is probably brines, but they're constrained in terms of how many brines there are out there. But they're also technological changes, both on the supply side and the demand side. So on the demand side, if we could figure out direct lithium extraction, which I think is going commercial with a French company in Argentina, but that's nuanced. So every brine is different in terms of how you would apply this direct lithium extraction. And then also looking at brines like with the oil companies and looking at a different method of potentially. And if that works, then there'll be an oversupply of lithium potentially. And then on the supply side, I still think lithium is required for most of these batteries, but we've seen before that when the engineers see a commodity that might be problematic in terms of supply and the supply chain, they engineer a way out of it. So one of that is sodium, which the Chinese are developing, and that's going up its own density and now getting to where lithium batteries are. So could we see that, coming in and then reducing the demand for lithium? So technically, I don't play the lithium market directly. I play it indirectly with exploration on a multi-commodity, prospect generator that just did a deal with Rio Tinto on lithium. Let the majors spend the money on lithium because you're not going to get it from the market.
Mm.
If you're just a lithium play and you're a junior, it's very hard to extract that money from the market at current times.
Is it too early for DLE plays though? I mean, I've seen a couple of those floating around, but it's again proving it up at commercial scale seems like it's could be the bottleneck there. So how do you even play that whole thematic?
Well, it's very hard. I mean, the thing is that you have to be so confident that the technical team on these projects know what they're doing at commercial scale, because it's just coming into play on one specific brine in Northwest Argentina. But just because it works there doesn't mean that you could take it and make it work everywhere. It's very similar to the Newton process in terms of leaching sulfides and trying to get an 80% recovery on these things and producing cathode. Is that it doesn't work for every project. The bugs need a certain kind of environment. They need a certain type of mineralization, just like that, those molecules and that they part of it needs a certain kind of nuance to get the kind of economic recovery that you need. And every play will be a bit different.
So did you have lithium exposure yourself right now?
Yeah, like I said, it's indirect with a prospect generator that does multiple commodities. That they do gold, they do spodumene, lithium, and they also do nickel and other things that Quebec's known for. But it's not like at one point, most of their valuation might have been on the nickel package that they had. Then it went down, and now they've gone back to gold, but they also got some antimony, and so it's gone up on that. And it's so for those sort of plays, it's nice to have a little bit of a multi-commodity exposure, and so they could reallocate capital to say, okay, the market will give us money to explore for lithium. Okay, they won't now. Okay, but they will give us money to explore for antimony. So you can constantly raise money, but the thematic is different.
Yeah. But no, that's what I meant. But no direct exposure though. Like
No,
it's not a
no,
name that you're like, oh,
no,
lithium's going up. I'm going to buy specifically because of
no,
lithium.
no, because technically, for the reasons I explained on the supply and demand side, there's too much risk
Yeah,
or uncertainty, which is the same thing.
yeah. No, that's fair. Well, what does your portfolio look like in total? Like, do you have maybe an overview or whatever from the perspective of the underlying metals? Do you have most
Yeah,
exposure
I
to
would
gold?
say, in terms of stage, most of them are non-cash flowing, except for one royalty generator that's cash flowing, and most of the other guys don't produce cash. But I would say more exploration than development, but we do have some development plays, and they're doing well, which is not always a good market, the orphan period. Um, Also, jurisdictionally, like I said, Argentina, Chile, the states, because I'm looking for that, ability to permit and domestic production. A bit of the Yukon, but infrastructure not as challenged as some other projects. Finland, as we talked about, Australia. So that's sort of like and Kazakhstan is sort of like a nuanced exposure to a potentially a little bit riskier jurisdiction, but infrastructurally great. Doesn't need a lot of grade to make it work there. Not a lot of impediments with respect to permitting. And they do have downstream facilities to treat copper. So that sort of exposure. And then in terms of commodities, copper, gold, copper, silver, and like I said, with respect to lithium and antimony, those are in some of the plays, but are not direct. It's not 100% antimony. It's not 100% lithium. It's part of the main product, and also a rare earth one as well.
Oh, that's the Brazil exposure, I suppose. Or
Yeah, Brazil, Chile, and trying to get into the States with a processing plant.
oh yeah, yeah. Oh, that's going to be an interesting one. I think that's going to take some time to build as well. Those are very long-term investments, and that'll be interesting to talk about as well.
Yeah, but I mean, they're really, I mean, it's all technical, but if you can contract the permitting timeline, which is what they're trying to do, the more important thing is technically, can they make it commercial?
Hmm.
That's more of the risk than I think permitting or potentially funding right now. It's trying to make that gap up because when China was coming up, they borrowed, stole, whatever, a lot of the technical capacity, intellectual property of the West, whether it's Europe or other parts, Australia, the States, or wherever. Right now, because of the way the US, Europe want to do it, or anybody, or Australia, they're leaving the Chinese out of it.
Hmm.
So they have to jump that gap quicker in terms of getting to where the Chinese are. Because the Chinese, it's not just, it's for those people that just think it's cheap labor, it's not that. Go read that book called Apple in China. It tells you how big of an impact Apple had on the engineering, in China that, accelerated their ability to manufacture. And that bleeds into everything and their ability. I mean, smelting technology, processing rare earths or antimony oxide, they have all of it.
Hmm.
And it's not just cheap labor, it's technical capacity. They have it and they can do it better than anybody. And so now we have to, jump that gap. And the amount of people that understand how to bridge that gap, there's not a lot of people like that out there. And so you're not going to flood the market in terms of the technical capacity to do rare earths or some of these other critical minerals in terms of processing.
Yeah, it feels like that's a whole podcast episode in and of itself, and I'm totally not saying this because I'm way out of my depth here and I have no questions to ask. But let's table that for another time. What do you think is the biggest risk here for juniors, though, Joe? What do you think? Yeah, is it a broad deleveraging event, as they call it? Is it higher for longer type of thing? Interest rates? Is it lower commodity prices? What's the biggest risk here?
Well, their biggest risk is raising money. And so all the risks about going to the market, is there a market? It will always be their issue. And they will always and understandably have it in their mindset that, we better take as much as we can now because we don't know if it's going to be there next year. And so what I see a lot of people trying to do is, back in, maybe 10 or 20 years ago, people would raise for the next season. They would go to your roundup, they would go to PDAC, they would go to these conferences with the idea of selling their wares and saying, oh, look, this is what we have. We're going to raise some money, blah, blah, blah. And then here's the field season. But now what they're tending to do is because sometimes when they get to that conference, the money's not there, but they still have the field season to come. Canada's got that advantage of flow through where you can attract capital that's not interested in your project, not interested in you, but they just want the tax break. Not everyone has that jurisdictional advantage for capital. So they tend to raise for 2 years. They go, well, in that 2 years, hopefully I'll hit a good intersection that I could come back to the market and raise more money at a premium. And that sort of habit, I think, is running because as one of my companies, they working capital wise, they were fine. They had a fully funded permitting, project, a drilling program to the end of the season. But like I said, when the ducks are quacking, you can raise some more money. And now you've pushed your funding for another 12 to 18 months that you can talk to people, but you don't need their money.
Mhm.
That's a much better conversation. Goes, oh, how much money? Yeah, we don't need money. We just need people to buy our shares. And that's what I want. That's what I want. But constantly raising it at a higher price, not issuing a lot of dilutive warrants that are long term, that are full. That sort of stuff sort of says something to me. Unless it's like one of these companies that's just like an advertising, like, hey, look at me, I'm here, you know. Because the US, a lot of the retail now, the high net worth, is a very important demand set, especially for people in low risk jurisdictions. Uh, and so if you're in the US, you need to get exposure to that high net worth audience. And you will go out of your way to talk to people, pay people that would get you that exposure because those people have a lot of capital. Another source of funding that the juniors may not get exposed to is this private funding of what venture capital funding coming out of Silicon Valley. They understand the issue because of artificial intelligence and everything they're doing, electric vehicles all need these kind of minerals, need copper, need this, but they're not seeing like, oh my God, it's going to take 30 years for this project, whatever. They're saying, okay, we're going to do it. Like we're smarter than you. We've got artificial intelligence, blah, blah, blah. We're going to contract this down to like 5 to 10 years. Like this one company is saying, oh, give me money, venture capitalists. We're going to use AI and all this other stuff. We've got 10 projects. Our goal is 10 projects in 10 years.
Mm.
Good luck. They're in the States, but they're not looking for retail. They're not looking for, big resource equity funds, nothing like that. They're looking at venture capitalists that have funded companies like PayPal, like Tesla, like Palantir, and that's where they've made their money. And so for them to drop $20 million on this project or a company is not a big deal for them. But if you compare that for a junior company, that's a big deal.
Yeah.
But these guys can stay private. And so their Lassonde curve looks much different because they stay private through the entire cycle almost. And their IPO would be, hey, we're in production.
Mm.
So it's a much different audience. And they've been doing a conference now, it's on its third year. And as I've been looking at a lot of the new technology and exploration and processing and getting around and the adaptation of AI, I mean, that's another source of funding that can be significant, but I don't know if it's a source of funding for juniors because they're not attracted to the junior concept. They're attracted to the application of technologies that they've invested in to solve this problem. Because if you read the book about Apple in China, these sort of companies and these venture capitalists see an issue and they run towards it. There's a technical gap here that we have to solve. We'll solve it. Whereas mining tends to be, oh my God, that's a high risk technical issue. We want off the shelf technology. So we're more reluctant to take that risk because we're taking all this other risk, jurisdictional risk, drill bit risk, financing risk, and all this other stuff. We don't want another risk by saying we're going to do a new sort of metallurgical process, or we're going to do a new drilling method, or something like that. They don't want to put that in because the investors won't be interested in that. Whereas these guys, the venture capitalists in the States, that's what they're keen on. That's what they want. If you're not applying these technologies to this problem, then they're not investing in you.
That too actually is a topic that could be a podcast in and of itself, specifically about do you stay private? How long do you stay private for? Should juniors even be public in the first place and stuff like that? Something that we
Well,
can.
like Colombian company I'm talking about, they've attracted funding from big institutional like BlackRock, and they've got a joint venture with a big major, and so money wise, they don't need it. So if you
Yeah.
don't need the public markets, you'll avoid them. because why bother doing financials every quarter? Why bother putting out news releases? Why bother doing all this other stuff when you can just keep it private? You'll always have money,
Yeah.
and you could take risks. Like, okay, let's drill these holes over here. Oh, we didn't hit. Okay, but your share price isn't going to go down 50% tomorrow.
Hmm. So it's essentially you want to give your money to the companies that don't want your money at all.
Yes, that's the
That's a good
nuance in
strategy.
all of this is it's those people that don't need you that you should be attracted to. You
Yeah.
don't want those people coming on bended knee.
Hmm. Yeah, exactly. When's Exploration Insights going public?
Yeah, no.
No, that's a good answer. No.
No, I mean, what we what I continue to thrive to do in terms of goal is stay independent, and have that technical bias uh, in terms of what we do. And so we built a little room here for ourselves. We don't go out to we don't have a huge audience in terms of subscribers like some other people, but our subscribers are pretty nuanced in themselves. They ask a lot of questions, and they won't get fooled. And so all the work I do is to make sure I don't embarrass myself in front of them.
Yeah, it's a good way of putting it, and that's Exploration Insights. I think that's actually a bit of a mic drop moment, so I might as well cut it here. Anything else that you think I'm forgetting to ask you though in the conversation today?
No, I think we covered a lot, and
Yeah,
I appreciate that we went on all these different little webs.
appreciate it as well. Always a pleasure. Not 3 hours this time, but that gives us reason to do this sooner rather than later. So I'm really looking forward to our next conversation. But thank you so much for doing this today.
All right. Thank you very much, Antonia. Cheers.